Fidelity Crypto is offered by Fidelity Digital Assets. What is DeFi? Let's look at the potential pros and cons. Ask a DeFi supporter, and they might tell you that one day the entire finance industry will run on crypto. From credit cards to banking to real estate transactions, they believe blockchain technology will eventually replace most, if not all, of our financial systems. Meanwhile, skeptics point to factors like lack of regulatory oversight, legal complexities, and security risks as reasons this won't happen. Let's take a closer look at the details. Remember that DeFi is short for decentralized finance. DeFi is a term for apps, platforms, and organizations that allow users to lend, borrow, stake, and trade crypto assets, and they use smart contracts to make things work. Smart contracts work a bit like vending machines. Vending machines follow a simple logic. Insert the correct amount and a snack will be released. Insert the incorrect amount and there's no snack. DeFi supporters believe the same if-then logic can be used to program financial agreements. Take payroll, for example. DeFi advocates envision a future where a smart contract could be programmed so that if an employee clocks in during the week of January 5th, then the smart contract will pay them on January 12th. The idea is that no HR middlemen would be needed, which could cut down on the potential for human error. Supporters believe this same if-then logic could be applied to the real estate industry. For example, automated smart contracts for processes like escrow and property transactions. In theory, this would also reduce the need for third-party intermediaries like real estate agents and mortgage lenders. Or take lending and borrowing, for example. Generally, to get a loan, you have to go through a bank or lending platform. With smart contracts, however, you could theoretically program a lending agreement directly with another person. No bank or lending platform needed. The theme here is that advocates believe DeFi can make financial systems more efficient, as well as reduce fees and processing times typically associated with middlemen. On the other hand, skeptics argue there are some significant challenges for DeFi. For example, DeFi currently lacks many of the built-in protections that existing centralized finance systems have. These include benefits like regulatory oversight, customer support, and more user-friendly interfaces. Also, if the blockchains that host DeFi platforms become congested, it may lead to higher transaction fees and slower confirmation times, which can lead to inefficiency. A third argument is that some legal agreements may not be truly automatable with smart contracts, in which case a third party would still be necessary. Finally, smart contracts are new and may come with security risks. We've seen how crypto platforms and blockchains can fall victim to cybersecurity attacks. Smart contracts may be subject to the same risks, which may make them unappealing to use for agreements involving significant amounts of money. Nevertheless, despite these challenges, DeFi is currently one of the largest sectors of the crypto industry by market cap. Here's a quick recap. Advocates think DeFi will eventually be used to automate many, if not all, financial agreements, while skeptics think it has too many logistic and security questions to fulfill this vision. DeFi is just one use case for crypto. Explore more crypto topics right here at Fidelity by visiting fidelity.com/learncrypto.